Hi everybody, my name is Sean, and today I will be going over a review of the market for this week. So S&P 500 had a pretty rough week today. It finished Friday higher for about 0.4% over here, but that wasn't nearly enough to prevent the weekly decline. The index had a particularly rough Thursday before bouncing back to Friday. The important thing here is that this wasn't necessarily a collapse in corporate fundamentals. Instead, investors were getting increasingly worried about their interest rates. Next off, let's go to QQQ, which is the ETF for all the different tech companies. So this tracks the Nasdaq 100. The QQQ was one of the most probably important stories of the week because technology and AI stocks have been doing a lot of very heavy lifting for the market. QQQ finished the week lower, with the Nasdaq also having a weekly decline. So in my opinion, the reason is pretty simple. For a long time, investors have been wanting to pay good prices for AI and tech companies because of the expectations and evaluations. But we're seeing a little less value nowadays. So yeah. Number 3, we have the IWM. This is for the Russell 2000 ETF. It's not the Dow ETF. Held up also really well. For here, Dow Jones. It's not surprising because the Dow Jones have already been really mature. Let's go back to IWM. So, small cap stocks are now really sensitive to interest rates because smaller companies tend to have greater financing needs and less flexibility than the higher cap corporations. So even though the broader market remains pretty strong on a year-to-date basis, the recent action is showing us that leadership is becoming much less straightforward. So next, I'll move on to TLT, which is the ETF for bonds. And yeah, so it's TLT had a really rough year this year. It's been on the decline for quite a long time. There's been serious pressure on it. There was a brief rebound in the middle of this week, as you can see over here, after the Treasury announced that they had plans to buy back some of the bonds and treasuries. After that, we'll move on to number 5, gold. So let's take a look at gold ETF. So gold ETF, it's been quite a good year so far. There's been a lot of decline lately though, and we have seen a pretty big rebound now. Gold ETFs has been consistently growing for these past few days. So gold is doing pretty well this past week. Next, we got Bitcoin ETF. So we can I'll just pull up one. So this is a Bitcoin trust. So yeah, we've seen Bitcoin spike these past few days. It's roughly up 5%, 6% this week. It's really good. Had a rough. It's been really rough these past few months, but at least we get to see a little bit of rebound. So after that, I'm gonna come here and tell you about some of the biggest news this past week. So US debt has crossed $40 trillion, which is pretty concerning. And investors they now debate how sustainable Americans' debt trajectory, and that's why this week's market is more interesting than rather saying stocks went down. But that might also be the reason why stocks are down. Alright, so that's gonna be it for today. Thank you for watching, and I'll see you next week.